India's largest electric two-wheeler player, Ola Electric, is going to come up with the year's largest initial public offering, raising or planning to raise at least 6,150 crore or so. This SoftBank-backed company has set up a price band of 72 to 76 per share for its maiden share sale. And although it's a loss-making company, etc., it has evinced a lot of interest in the investor community. And why not? Because its volumes have been growing at a pretty fast clip from 1.56 lakh units in FY 2023 to 3.3 lakh units in FY 24. Now that's a big jump. And the Ola founder Bhavesh Agarwal, his point was that when an industry is changing, you must build scale, and that's perhaps what he is doing. So the founder is all positive about the kind of scale that he's going to build. But should we be positive about the IPO? Should you, as investors, take stake, participate in the IPO? Let's have a discussion with PrimeInvestor's analysts. I have with me here Sudharsan, my analyst, and Chandrachoodamani, our senior head of equity analysis. Thanks, guys, for joining. So we are going to dive right in to kind of understand, what's kind of driving this sector. Where are we now? I mean, we all know that EV penetration is a pretty strong story over the past couple of years. But we are hearing quite a few things in terms of several roadblocks that are coming in between. So, Sudarshan, can you kind of, brief us on where we stand today in this industry and whether there are indeed the roadblocks that are being spoken of?
So, good afternoon, ma'am. So, in general, there are two different stories about EV in India. In one hand, the nation and the policymakers view this as a one step closer to achieving the net zero emission and reducing their environmental hazards. In the other hand, and the general picture for a common man is his immediate financial benefit that he can save 2,000 or 3,000 on a monthly basis on his daily fuel expenses. But this is where the problem lies. The life of an EV battery is 3 to 5 years if used regularly and maintained properly. After 3 years, you need to replace the battery. The battery replacement cost for the most selling Ola model, Ola S1 Pro, is 87,000 rupee. So the overall cost for the scooter is 1.3 to 1.4 lakhs. So when Ola is trying to target a mass market, mostly middle class people who use their vehicles daily for about 40 to 50 kilometers, let's consider this as a case scenario. A person who spends daily 100 rupees for a fuel, in comparison, electric vehicle may seem superior over IC engine for him. In terms of fuel cost, if you do the math, 100 rupees daily for 3 years is more than 1 lakh rupees, where it's less than the battery replacement cost for Ola. It's 87,000. I agree with that. But what about the psychology of the middle class people? If we approach them with this mindset that people will save the 100 rupees for every 3 years and buy EV battery, most people in India live from paycheck to paycheck. So Ola Electric needs to break the mental barrier that is among the middle class people to incur this higher cost that is happening after every 3 or 4 years to buy the 87,000 rupees, the battery replacement cost. So that's it, ma'am. That's the only barrier they will be getting ahead of if they are completely focusing on the mass market segment.
Okay. So essentially, it's the economics that will drive,
Yes,
the mass market segment in this area. But Sudarshan, even so, it's the largest player in India today. So what is Ola's position in terms of market share, and what is its competitive advantage? There must be a reason why they are as large as they are and have a competitive edge. So could you throw some light on that?
Yes, ma'am. So Ola Electric is the India's largest pure EV player with 35% market share. So in the second, third, and fourth, we have the TVS, Eicher, and Bajaj Motors. So they have a very unique competitive edge. It's their pricing power and the driving range per charge compared to the other players. For example, the highest selling model Ola S1 Pro, you have a driving range of up to 191 kilometers. But what makes this company sell this product at a very competitive price? So I think their competitive advantage is backed by the government schemes and initiatives based on EV. So they have registered under various schemes like FAME, EMPS, PLIs for cell manufacturing and automobile, etc. So because of this, they are able to sell this at a very competitive price compared to their peers. For example, last year, the government has reduced the subsidies for FAME from 40% to 15%. So the company left with no choice but to increase this price. So they brought down the sales, it brought down the sales by 58% in comparison to the June quarter and their May quarter. And for EV cell manufacturing, they are building gigafactories for their in-house manufacturing. They import 35% of the raw material and products. And recently, if you have been aware of the union budget, the Indian government has announced a duty free on 75 critical minerals to improvise domestic production, and that is also mainly focused on EV. So, in that 75 critical minerals, the most important component for electric vehicle battery manufacturing, lithium and cobalt. Now, this company can enjoy duty free on these important minerals. So, if this product, so combining all of these duty free things, if the company is not reducing its product price, it's fine. So once they are getting product at a very low price and they are planning to attract more customers by selling the product very low price, in future the future is uncertain. Once the government uh, imposes the tax on this critical minerals again, that may affect the company's financial. They left with only two choices. They have to increase their product price, or they have to keep selling at the same price by incurring some losses. It seems they are hurrying up its IPO before any impact of growth or maybe slowdown. So that's my point of view on this thing, ma'am.
Okay, fine. That's interesting. So essentially, it is being driven by the number of subsidies that they have been getting. So the challenge would lie what happens if those are no longer there. So that's the kind of summary that we seem to have from Sudarshan. But Mani, what is your assessment of the future of Ola? I mean, does the game get tougher because these subsidies are not going to live forever, right? So what exactly happens?
Yes, as Sudarshan mentioned, the important thing for accelerated EV adoption is the economics. That is, economics in favor of the EV buyer. So, from that context, what Ola is trying to do makes absolute sense because they are trying to keep that prices reachable to an EV buyer so that that economics remains intact. So, that is what exactly they are trying to do. And the initial apprehension for an EV buyer is not there anymore. People are just looking at the economics. And what we can see from the financials is that Ola is still running at negative 20% EBITDA. That is on 5,000 crores of revenue. They have made 1,000 crores of losses. So that is there. But then if Ola has to keep the prices intact so that it is always attractive for the buyer, then there are only three other ways through which they can make money. So what are the three ways? Number one, they are actually part of the PLI benefits for vehicle manufacturing as well as cell manufacturing. And you can see from the screen that the vehicle manufacturing will attract somewhere around 13 to 18% of the sales value in terms of PLI. And the cell manufacturing will also attract some 20% of the sales value as benefits. So these are immense benefits. And if we add the benefits and if we take into account of these benefits, then there is every probability that the company can move from losses to profit at the EBITDA level. The second important thing is that the battery manufacturing venture that is coming at a size of 20 gigawatt hour. And that is a very big size because only 1/4 of that may be consumed by Ola internally, but the remaining will be sold outside. So that itself can become a far higher venture than. So these are the two important ways in which they can become profitable. And the third thing is the optionalities, like they can get into three-wheeler talks of Ola cars as well. But now they have scrapped the plan of the Ola cars ahead of the IPO, but the three-wheeler may also be intact, which adds to volume as well as scale. So these are the three ways in which they can become profitable. And you can also see their gross margin at 16.5% at this point of time is lower than the 30 to 33% for other players or the general industry that operates at say 15 to 20% EBITDA margin. So if all these benefits accrue, then there is no doubt that Ola can eventually become profitable, eventually increase their gross margin to that 30 to 35%, and then become EBITDA profitable, and then at the PAT level as well. but everything is contingent on this mammoth scale. They have to achieve that scale, and that in turn is contingent on the accelerated EV transition, the cell manufacturing facilities, and the certainty of PLI incentives. That is where it is now.
Okay, that's interesting. So on one hand, Sudarshan mentioned about the challenges in terms of the economics of the vehicle and that remaining attractive enough for the masses to buy. And you're mentioning for them to achieve scale in terms of both manufacturing of the cells and the vehicle, you will need these PLI schemes, right? So from both
Yes.
ends, if we see, both of these are basically tied to regulations money. So that essentially makes this a entirely regulation driven play. I mean, is that completely contingent on whether these regulations, whether in terms of incentives or FAME incentives or PLI, continue to be in place? So is that the biggest criteria for its success?
Yeah, there are two ways to look at. Number one, as a company. So we are looking at this IPO as a company where the cell manufacturing business itself can be far bigger than the vehicle sale business or the scooter or two-wheeler sales business itself. And that business itself can be a make or break business because that is contingent on PLA benefits, which is also stringent on certain timelines for delivery or timelines with respect to when they will commence the project as well as how much volume or sales volume they generate. So this makes it very difficult, but that business itself will be far bigger than the two-wheeler or the vehicle business itself for Ola. And going by ballpark estimates, they will have to invest more than $1 billion, barring whatever they are allocating now, to reach that 20 gigawatt capacity and then deliver on the timelines. And so they may also have to come up with another round of fundraising, either in this company itself or in the subsidiary earlier at some point of time to fund that expansion. Now, whatever they are raising, the 5,500 crores in fresh issue that they are raising, that will actually a part of that will actually go to the phase one. That is up to 5 gigawatt capacity that they are planning to commence operations in this financial year itself. And then for the R&D or product development or all these kind of things. So beyond that, they will still need money to complete this 20 gigawatt of capacity, and the cell manufacturing business itself can be a make or break venture for Ola. So that is the important thing when we are looking at the company as a whole. It is not about vehicle manufacturing itself, but this is also there. And the only good thing about this IPO is that we are actually funding the business now, because the offer for sale is only a small percentage. The 5,500 crores is fresh issue.
Right.
So we are funding the business, and that is the only good thing about IPO. And we are funding a promoter who is actually dreaming big in an industry that is changing big. But it comes, but the kind of scale that he is looking at definitely comes with a very big execution risk. And the only thing we can comment about this IPO at this point of time is that this 5,000 crore revenue company is coming up with an IPO at a 30,000 crores post-issue market value and a price to sale ratio of say 6 times. That is the only thing we can comment. But beyond that, there is nothing to comment on valuation, because
that was going to be my next question. So on valuation, but how do you value a company which is still at losses even at EBITDA level?
There is no way to value because what Ola will do. So right now they are issuing this 5,000 crores company at a valuation of 30,000 crores, and this is a hugely loss-making company. So there is no way you can justify this valuation. But what if they do many times the sales in future? And that is, say, if they do 6x sales in future, that is contingent on the faster adoption of the EV itself. Then second is the PLI benefits that accrue to them, and their cell manufacturing itself, which is also contingent on many PLI benefits. So if they deliver all these things in time, then one can be reasonably assured that by the time they deliver all these things, say 3 or 4 years hence, they will be at a certain size and they will be profitable. But at this point of time, it is extremely difficult to get any clear sense on the EV transition scale itself or the EV growth story itself, contingent on many other things, on subsidies, economics, and all these things. Then second, the predictability with respect to the cell manufacturing itself. And third, the whole overall visibility for the company itself at this point of time. And that makes it very difficult to give a clear opinion about this IPO. But as I said, this is all about a promoter dreaming big in an industry that is changing big. and the promoter will be holding 37% stake post the IPO. So the outcome will be binary, and that is the way to look at this IPO.
Yeah. So Sudarshan, we had money stating three things very clearly that has to happen for this company to go into a path of profitability. If you were to look for, let's assume the IPO is out and the company is listed and you keep watch, what is the one thing that you will look for in this company that will, give you cues that it has to be taken seriously?
So even though if the company is making losses now, both in terms of EBITDA and their profit and all, they are trying to cover a very large group of market, like in the mostly middle class market. If they succeed in that thing, and Manisha has said three more things to look at for the company's success in the future. By combining these two things, this company can become very profitable. So that may have a chance of investing in the company.
Okay. So essentially, from what you both have told about the company, this is a company that you have to assess like a VC would assess a startup, right? So if you were an investor, it essentially is about a venture capitalist believing whether he could put money in this opportunity, in this EV opportunity. He could put his money to this kind of business on whether it will scale up and whether he trusts this promoter above all else, because in a startup that's very important. So unless as an investor at this stage we are able to think like a VC, not just think like a VC but have deep pockets like a VC, for a retail investor a call at this point in this kind of a company would really be very tough. At PrimeInvestor, obviously we do not have a recommendation on this IPO. We will continue to track the EV sector, and this being the largest in the two-wheeler space in the sector, we will look for signs that both Mani and Sudarshan have mentioned to us in terms of starting to, seriously look at an investment opportunity in this space. So until then, wish you all luck. Happy investing.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.